Hi everyone and welcome. It's Steve Johnson here, Chief Investment Officer at Forager Funds. This is another of our short weekly videos, and today I just thought I'd discuss our view about the potential for good future returns from equities. We've had quite a bit of feedback from clients since the quarterly reports and performance reports went out, questioning how we could be feeling good about the future given how bad the economy is, and particularly given how much the stock market has recovered since its March lows. And I just wanted to touch on a few key points in a little bit more detail. Firstly, I don't think the Australian market in particular is expensive at the moment. The peak to current with decline in the market is about 16% from where it was trading in February, and I think the Australian economy is holding up relatively well. Even if it wasn't, you're probably going to lose a year, two at most, of profits here, and as things start to recover, particularly in this low interest rate environment, I think you can look at the overall level of the Aussie market and be pretty confident that you're going to do better owning a low cost index fund over the next 10 years than you will with cash in the bank. It's not that excites us the most though, it's the dispersion of opportunities within that index. We have pockets of the market that are trading at all-time highs, pockets of the market that people are feeling particularly optimistic about and where share prices have run very, very hard over the past 6 months. There are other parts of the market that have hardly rallied at all. That's not just true here in Australia, but it's true globally as well. And it's enabling us to find lots of new ideas. So we are recycling out of some of the stocks that have done particularly well for us over the past few months. Again, that's mostly in our international fund, but stocks like GAN, Celsius, we've taken a little bit of money off the table. Businesses there where we've made multiples of our money, our opportunity to sell those and recycle it into new opportunities has been very high. We've added 3 new stocks to that international fund over the past month. We'll talk about them more in some coming quarterly reports, but they are businesses that we are particularly excited about. If you're not in that sweet spot at the moment, typically technology, typically businesses that people feel like they're not taking any risk on, there are still plenty of opportunities out there, and we're finding those in both of our funds. The other thing that's really important is our ability just to recycle within each stock that we've got because of the volatility that is out there. If you're an investor in our international fund, you would have received a big distribution from that fund this year. That is a function of the good returns that we've had over the past 12 months, but it's also a function of us recycling that capital. So it's a trust and we have to pay distributions when we make realized profits. And we've been realizing quite a bit over the past year, not just selling down some of those stocks that have done very well for us, but even just within the wide range that some stocks have traded at. One of our favorite holdings in the international fund is Zebra Technologies. In the space of 12 months, it's traded from $190 up to $250, back to $180, and today trades at $265. That has given us the opportunity to buy, sell a bit, buy it again, and sell a bit as it's gone back up higher. And we're doing that across multiple names in both funds. AMA is a business that we think is going to do very well over a long period of time in our Australian fund, but the share price has also been very volatile in the short term. It's seen as a proxy for economic recovery and the economy opening back up, and it can be up 20% when people are feeling optimistic, and it can be down 20% on a day where people are feeling particularly pessimistic. That's giving us the opportunity again to buy when people are pessimistic and to take a bit of money off the table at the top. So these are core holdings that we want to hold for a very long time, but the stock market volatility that's out there is giving us the ability to trim and add to those positions on multiple times and add returns to the portfolio. Look, so they're the 3 reasons we're feeling pretty optimistic despite markets having rallied as hard as they have. I think in this interest rate environment, in general, equities are going to do pretty well, but most importantly, the dispersion of opportunity out there is creating plenty of opportunity for stock pickers. Thanks, and we'll see you again next week.